Let's begin with what's happening in India, because I think this is probably front and center for a lot of our viewers today, looking at the India markets coming online after this really interesting election result in the country. Modi's supermajority clearly under pressure. Indian stocks, the bond market, the rupee, all hanging in the balance now. So what do you see as the ultimate market outcome as a result of this check on Modi's power?
Good morning. Look, I think this is an example where I think markets went into the election with a very specific sort of expectation, and we've seen disappointment from that. But this is where I believe the historical experience can be quite a strong guide to where markets might go from here. If you go back to previous elections, we've seen quite a big move on election day, a positive one if it's in line with expectations, or a big drawdown when you've seen a negative surprise. But ultimately, long-term returns are still very dependent on earnings. They're very dependent on the policy-making outcome. So clearly a lot of questions ahead of us in terms of the specific form the government takes with its allies. But for us, the key would really be what the policy agenda looks like. And of course, we have the budget sort of upcoming in a few weeks' time. But that for markets, really is key, because volatility, that's election-related. Yes, I think that's very much the focus today over the next few days. But ultimately, when you think about longer-term allocations, that's not really the key driver. Markets have done well, regardless of single-party or coalition governments. It's that policy agenda and what that means for economic and earnings growth. I think that's really where the focus will return, and where there's, in our view, still reason for optimism.
Yeah, and this is going to be so interesting to watch, because we saw stocks really getting crushed yesterday in India. Foreign investors pulling out something like $1.5 billion worth of shares, and also shares in the Adani family of companies as well, which of course have very close ties to Modi, also slumping yesterday. Adani Enterprises and Adani Ports in focus. These stocks were the biggest losers on the Nifty 50 index yesterday. So when you assess the value creation that's now been made off the back of the most recent election results, is this a market that you want to be invested in? And how should investors be thinking about allocations there?
Well, do you want to be invested? In our view, yes. I think that a lot of what you described in terms of the pullback, whether it's a market or specific sectors or stocks, let's not forget it comes off a market in the last few weeks where positioning was clearly a bit one-sided. And the discussion that was really happening, the narrative was one of, look, the outlook's great, but our valuation's potentially a problem at some stage. Is the outlook sufficiently optimistic? Which in our view, of course, it is. So the fact that we've seen a pullback from that sort of positioning level, to us, less of a surprise. And again, when we put the size of the sell-off against the kind of moves we've seen around election surprises historically, it's not unusual. I think the most important thing today for investors really step back and say, what does the long-term trajectory look like? Because it's still about buying into what we think is an attractive long-term growth outlook. The key, of course, paying a reasonable price for that. In our view, still a market that has attractive returns ahead of us. So to us, it's about really using these type of pullbacks, which are more positioning, individual sentiment driven, to really sort of build appropriate exposure long term. We're still overweight within Asia-Japan context. But like I said, I think the key to sort of assessing the outlook from here is the policy-making agenda, for which, look, if we're still seeing an NDA government coming in, there will be adjustments, no doubt. But there's little reason at this point in time to expect a dramatic shift in policy, at least from the point of view of financial markets earnings outlook. I think that's really the key here.